In the meantime, folks, the stock market finally hit a speed bump last month. And listen, we all know there are going to be periods when the market goes up and down, but let's admit it, we became a little bit spoiled here. In fact, I think this tweet from Bespoke underscores it all, right? So the only time the S&P 500 was up 10% year to date in the first quarter and fell 3% in April. How spoiled are we? The last time it happened was 1936. Of course, they said, look at the bright side. Since then, on average, the market is up. The first quarter, 11%, May, almost 5%, and for the rest of the year, almost 25%. Let's hope they're right. Let's bring in BNY Mellon Wealth Management Head of Investment Strategy and Equity Advisory Solutions. Alicia, if you get one more title, we can't even do the show. So, listen, I know, let's start with this whole thing. I know you were pretty optimistic and relatively bullish. So, I mean, this makes me feel a little better. History's on our side.
Right. Usually April is a very positive month, not this year.
Right.
But it is kind of following the election year, which tends to be strong out of the gate, weak in the next few months, and then you finish the year strong. And so we still think fundamentally the economy's strong enough, the unemployment rate is good, and as long as the Fed doesn't pivot from the pivot, meaning the pivot was in December towards cutting. As long as they don't say we're hiking, then I think the market's fine.
How do they acknowledge higher inflation? Like, okay, in January, it was because it got cold. It's always confusing me. Economists don't know it gets cold in January. Okay. February, there was some other excuse. I think Easter came early. Whatever. Now, 3 or 4 months in a row, you can't keep excusing it or looking the other way. So how do you acknowledge higher inflation but don't bring up hiking? Because someone's going to ask during the Q&A.
So someone's going to ask what the threshold is, right? Someone's going to say, what's your threshold for a hike? I think the answer here is to really thread the needle, which is on the way down, that last mile is sticky. This is consistent with sticky. It doesn't mean it's reversing. And there's a difference between those two things. Okay. Ultimately, I think part of the problem here on inflation is that oil prices moved higher. And that's feeding into producer prices, and that's feeding into some of the goods prices as well. That's the sticky area that the Fed can't control.
Your firm was at 3, now you're at 1 rate cut.
Yeah.
You were at 30% chance of recession, now 15% chance of recession.
That's right.
Sounds like, though, then that sounds like you're still in something of a soft landing camp.
We're still in a soft landing camp. I'll say this, as long as rates stay high for longer, and we're not saying higher, we're saying high, because we don't think the Fed hikes from here, it's going to slowly squeeze parts of the economy that are credit sensitive. So commercial real estate, some of the consumers who are using credit to spend, you are going to see further pain there. And on the corporate side, it means that the smaller companies that have to borrow to grow are going to be in for a harder time. And they're 25% below their all-time high, the Russell.
Yeah, we saw MasterCard already said the first few days in this April, in the month of April, 28 days were sort of slowing down. So before we would go then, areas to be invested in the stock market. Mag 7 still, despite the volatility?
So fast growth, but they win in either scenario. They win in a high rate scenario and they win in a low rate scenario because they've got moats, they've got free cash flow. You have to invest in free cash flowing companies.
Companies that have the cash, they don't need to go to the markets.
They don't need to borrow.
AI themes, reshoring?
We love reshoring. We love reshoring because there's a lot of money. I mean, there's industrial policy, and as investors, you have to go where the money's going, and it's going towards manufacturing, and it's going towards the chip sector. So we think reshoring is real. I mean, the largest trading partner for the U.S. now is Mexico. It's not China. So this trend will continue. Depending on who's elected, the trend will really further continue.
But it's going to continue on either candidate.
This is a decade-long trend that we think investors should be exposed to.
Small caps have struggled. They have struggled.
They have struggled. I'd say for small caps, they are 25% below the low. You don't want to sell at the low. You may want to start nibbling in case we're wrong about inflation being sticky. Because the market's now pricing in sticky inflation and barely one cut this year.
Right.
If it goes the other way, small caps will rally.
Great seeing you.
Thank
you so much,
Great
Alicia.
to see you.
Appreciate it.